She works at HP.
2 L's and 2 T's.
Sounds very
Yeah.
not in the Somali bit, obviously.
My name is Derek. I'm part of the team at Avoka. I'd like to welcome everybody, especially on such a grim and bleak day. I really appreciate you braving what could be some nasty weather and coming out and joining us this morning. I'm going to start off by sharing with you some research and some observations about the expectations of everybody's favourite people, our customers. And following on from that, we've got Nick from BT, who's going to walk you through a case study of how they've actually improved the customer experience for opening a new account with BT in their wrap product set. And following on from that, we've got Lakshmi, if the technology gods smile on us, from San Jose. She's going to come in via web meeting and she's going to show us some of the latest and greatest things that Adobe have been doing with their customers in the US. So we've kind of saved the shiny new stuff for right towards the end. So the author, John Gerzerma, has produced a book entitled Spend Shift. And he describes the spend shift as a consumer-led movement to promote values through the power of consumption. So basically, after the GFC, they've noticed that people are really only willing to spend money with organizations they trust, with organizations that they feel that they've got some kind of a connection to. And it's gone beyond one author's idea. It's actually, as a concept, as a terminology, has been quite widely accepted inside of the US. And it's a global movement. So while the book was written in the US, the data that John used to create this concept or to identify this segment that he's referring to as the spend shift is from an organization with a consumer database of 800,000 consumers across 51 different countries. So whether you subscribe to the terminology of spend shift or you call it something else, I don't think there's any question about the fact that post GFC, the recession has taken its toll on consumers and it's changing the way in which they're consuming. One of the impacts has been confidence and another has been trust. Now, while the financial services industry was certainly kind of highlighted as the villains of the global financial crisis, if you have a look at that chart, which is an index of trust, it's declined across every single industry up there. Some organizations have gone from negative to more negative. So between 2005 and 2010, they started off not so great. Now they're in much worse shape. And some have actually gone from positive to negative. But there's not a single industry across that chart in 2010 that's actually in a positive territory when it comes to whether or not consumers trust them anymore. So one of the outcomes of that is self-reliance. People are taking back control. They're investing in themselves so that they're less reliant on the organizations that they do business with. Now, this change in attitudes is manifesting itself in a whole bunch of different ways. Some people are telling organizations very publicly exactly what they think of them, and they're not exactly being subtle about it either. Others are using the mechanisms of global forums to actually tell people what they think about them. That's not the official Bank of America Facebook page. They don't have one. But it's still got 7,000 people who are using it to comment on what they think about the organization. So, as a result of that, people are now beginning to change how they consume. And they're changing how they consume on the basis of what they now feel is important to them. So previously, if you go back to about 2005, things like trendy and cool and so on were values that people actually felt were important in the organizations they're dealing with. Now it's kind and high quality and friendly. They really want to feel like that they've actually got an empathetic relationship with the people that they're doing business with. So in some ways, the people with the placards are easier to do business, to deal with because they're telling the businesses they deal with exactly what they think of them. But then there's a much larger segment of the community that is simply moving away from those organizations and finding the ones that they can actually connect to. They're singling out the organizations they want to do business with. So we've got a bunch of clever organizations that are actually responding to this. So if you get a chance, check out the Patagonia Footprint Chronicles on the Patagonia website. They're quite openly talking about the environmental impact of their technically brilliant waterproof products. So they're quite honestly saying, in order to produce something that works, something that keeps you dry, we've got to use products that are far from perfect. And they're not trying to hide that from consumers, they're highlighting the good and the bad of the products so that customers can make an informed purchasing decision. They're opening up the kimono. Or maybe you want to follow in the footsteps of Insinger de Beaufort in the Netherlands. They're offering their private banking customers an item from a bygone era of the banking industry, the shoebox. They literally deliver to their private banking customers every month by courier a shoebox. The private banking customer fills it with their tax returns, their bills to be paid, checks to be deposited, and the courier comes back a month later, picks it up, and just takes care of it for them. Interestingly, Insinger de Beaufort are offering that service to customers that aren't with them. They're going to their competitors and saying, hey, we'll give you the shoebox service anyway. We'll take care of your banking. Then we've got Auckland Savings Bank a little bit closer to home. They've created a virtual branch on Facebook. Don't have a look at it, it's incredible. The lady with the blonde hair talks to you. It's animated, it's virtual reality, it looks very realistic. But whether you're a customer or not, you can go to their virtual branch. It's got opening hours, it's got real people, and you can chat. And it's also got queues. When I actually went on here and took this screenshot, of the 8 people listed available to chat, only one of them was actually available. So it's kind of very, very similar concept. Now, a wise man I met at an Adobe conference many years ago said to me, go to where the people are. If you want to get to the customers, don't try and bring them to you, go to where they are. And as a result, many of you in this room probably have branches in shopping centres, and you're probably starting to open them on the weekends because you're going to where people are and you're trying to provide a service that's convenient. Facebook has 500 million people, and the real estate's a hell of a lot cheaper. So Auckland Savings Bank have gone to Facebook and said, is this an environment where we can engage with a customer and potentially take them from not being a customer to a customer, or provide them with a level of service that they aren't getting anywhere else? But in addition to traditional businesses responding to differences in customer expectations, we've also got new businesses emerging. So in an environment where you may not trust your bank, you'll always trust your granny. And Grannies Inc. in the UK will connect you with a real live granny if you haven't got one. And you can pay her to knit you a scarf or a vest or a pair of gloves or whatever it is you want. You can submit your design, she'll give you a quote and she'll knit it for you, or you can choose from one of the existing designs. So in an environment where you may be worried about your sports shoe company, maybe using slave labor in a sweatshop somewhere in Asia, you can be pretty confident that the granny is sitting in her living room, knitting with love and care even though you're paying her, something that's exactly what you were looking for. And as another example of a new and emerging business initiative, Kickstarter.com describes itself as the largest funding platform in the world for creative projects. So where venture capital used to be the realm of the incredibly rich, Kickstarter is actually giving small businesses the opportunity to get funding from everyday people to get their projects started. Every month, thousands of people are contributing millions of dollars to projects in music, film, technology, design. Now, it's not like VC in the typical sense in that the creator actually retains ownership of what it is that they're building. But for anybody who contributes money to get them started, they return typically the product at a reduced price because you've helped get me started, and also a deeper relationship with the organization. Now this example, the lunatic, is basically the concept that somebody had to turn an iPod Nano into a watch, a touchscreen watch. by creating a really well-designed, basically strap and casing for that watch. They launched their project on Kickstarter.com asking for $15,000 to get themselves started. They got $941,000 from 13,500 people. And all of that happening in an environment where the people who are contributing money knew that if this project didn't work, the money they contributed they would have lost. But we had people pledging $1, we had people pledging $25 to get it started. And in the financial services industry, if you haven't heard of Mint.com, wake up. It's on its way to Australia. Mint.com is a free service allowing customers to bring together information about the various financial institutions they deal with on a day-to-day basis. It automatically categorizes all of the transactions across their various accounts, and it gives them a single online place to manage their savings and budgets. They can access it whether they're on a PC or a smartphone. Why is it free? Because Mint.com have information about your bank accounts and your transactions. So as a result, inside the service, they make recommendations regarding other financial products. And they will typically have negotiated a referral fee with the likes of you guys to be recommending customers to move across to your account or your product. Now, they guarantee to provide an unbiased recommendation regardless of the referrals, and they've opened a kimono and they're using social networking as a channel to make sure that people feel like they are actually living up to that guarantee of being unbiased. So they're using social networking, if you like, for self-regulation with their customers. Go to the Mint.com page on Facebook. They've got 100,000 friends. Now, I believe the average within Facebook is, I think, the average person has 140 friends. So I've got 100,000 people liking me. You multiply that by 140, and you get the number of people that I'm able to touch as a result of that relationship that I've got on Facebook. So they're growing incredibly rapidly. They're bringing this service to Australia, and their success in the US has been based on the fact that they're providing the customer experience customers are looking for, but they can't get from their financial services companies. So we've got some businesses like Patagonia and Auckland Savings Bank who are responding to changes. We've got brand new businesses emerging like Mint.com. But then we've got a segment of customers who are saying, you know what, I can actually change behavior myself. They're actually trying to change the world and change the organizations they deal with through the power of their own consumption. The carrot mob is basically the opposite of a boycott. The organizer of the carrot mob encourages local businesses to compete to see who can make the biggest change for the better of the world. And then the winning business, the carrot mob organizer, with the carrot mob and all of their friends, go to that business and they spend their money. So an example here in Surrey Hills, with the carrot mob here in Sydney, was they asked local supermarkets, what will you do for our business? One supermarket said, I will pledge 10% of all the profits that we make on this particular day of sales towards Greenpeace or some kind of environmental charity. So the carrot mob turned up and they bought their toothpaste and their shampoo and their bread and all the things they would have bought anyway, they bought it from that store. So that store now has a whole bunch of customers they had no relationship with previously that know about them as a result of the carrot mob. So as I said, think of it as it's the opposite of a boycott. Where a boycott is trying to punish negative behavior, the carrot mob is saying, I will reward you if you do something good. So all these changes in consumer behavior are indicating one thing very, very clearly. I think we've seen the death of a salesman. People do not want to be sold to anymore. They want to buy. They want to feel like they're making informed purchasing decisions. So I'll give you an example. Go to the Ray-Ban website. And if you get a webcam on your PC or your laptop, you can virtually try on, in the comfort of your living room, any pair of Ray-Ban sunglasses in their current catalog. I did buy a pair of Ray-Ban sunglasses. I didn't buy the aviators. I can't make that look work on me. But it at least gave me an opportunity to have a look and see what they would look like. They look dumb. And this desire that customers have to be making informed purchasing decisions also applies to financial services products. According to some recent research from Google Finance, people are ignoring your marketing in favor of their own research. And they're spending a significant amount of time on their own research into financial services products. So we're talking 3 hours to research a credit card, 11 hours to research a mortgage product. But the thing I found most staggering about Google's stats was that 77% of people didn't know about the product they ended up purchasing when they began their research. So what does that say for traditional marketing and advertising? So if customers are complaining, what is it that they're looking for? And according to Bank of America, when they're engaging with customers, customers are looking for control, choice, and clarity. So organizations have an opportunity to deliver an experience and a relationship to their customers based on control, choice, and clarity. Now, to put it another way, the Forrester research recommends that you create super experiences, standing for simple, ubiquitous, personal, empowering, and reassuring. So let's have a look at what examples of super experiences in financial services can be. Anybody here from AMP? Fantastic. The Super Simulator, I think, was launched probably 4 years ago, 4 or 5 years ago. And in terms of superannuation calculators, it's still by far and away the best one that's out there. It asks you, as a customer, 5 really simple questions. And then, as a result of answering those questions, it gives you your forecast position when you retire. It also tells you what your target position should be when you retire. And surprise, surprise, every time I've done this, and done it several times over the last few years, there's a gap between my target and my forecast. But it allows you to then adjust your contributions by just dragging the sliders, and you can see what the impact would be. So how much in personal contributions could I realistically make on an annual basis, and how much longer do I need to work before I can retire if I'm going to actually hit my goals? It is incredibly simple to use. Ubiquitous. The virtual wallet by PNC gives you visibility into your money anywhere on any device. It's so ubiquitous, it's so out there, it gives you visibility of your money everywhere. You can even see where your kids are spending it. They've provided you with a mechanism via the student edition. You should seriously Google this, Google PNC Virtual Wallet Student Edition, and there's a video, runs for about 2 minutes, that explains to you that you set up a relationship with your kid that happens to be in university, you can transfer money to them, they get to see that the money has been transferred by their virtual wallet. They then spend it, you get to see what they're spending it on. It also interfaces, they may not like that, it also interfaces with the social calendar of the universities in the US. So they can see if the Rose Bowl is coming up in 2 weekends away, and it makes recommendations that they look at saving some money because they're probably going to need some money for beer and pizza. So it's giving the parents the ability to give money to the kids, giving the kids the ability to spend the money, but also budget for the things that they really want in a cool environment that's, runs on their iPhone, runs on their PC, and it gives PNC hooks into students who haven't yet graduated, who will be their customers tomorrow, because they're just getting used to using the PNC service. Personal. T-Mobile, one of the largest, there's basically 3 significant carriers in the US for mobile phones. T-Mobile are one of the largest. And they've actually created that single consistent view of the customer to achieve what many other people seem to be failing to do. So whether you walk into a T-Mobile store, whether you phone the call center, whether you're on your PC at home, or you're using your smartphone walking down the street, you will have a consistent view of your relationship with T-Mobile. And the staff that you're dealing with at T-Mobile will have a single view. So activation of a new service, like a mobile phone, is not about the 6 systems that they need to go through in order to actually activate that service. It's about clicking the button that says activate. They've kept it really simple. They've put the layer on top of the complexity of their technology and said, that's not the customer's problem. That's our problem to deal with. Empowering. The Discover Card and BBVA Compass have created really easily configured, tailored financial products for their customers. So for example, with the BBVA Build Toward a Checking service, if loyalty rewards are important to you, you can toggle them on and off and see what impact it has. So they've created a product where your first 2 services within your checking product are free, and every service after that is going to cost you $2 a month. So you can literally just configure it to be exactly the kind of product you want and pay on a monthly basis the amount that you want for that. And reassuring. Impulse in Germany are an insurance company. They've managed to combine the best of a face-to-face relationship with a customer when trying to sell with the power of the internet. Let me tell you what happens. If you're a potential customer of Impulse and you phone the call center, it goes like this. Call center asks, are you in front of a computer? Customer generally responds, yes I am. That's how I got the phone number to call you in the first place, because that's where people get them. Can't remember the last time I used white pages for anything other than to hold the door open. Call center says, you're in front of a computer, you've got access to the internet, chances are you've got the flash player on your PC. So I know I'm going to be able to connect to you. So they invite the customer into a one-to-one virtual meeting room while they're on the phone. Now, signing somebody up for life insurance is about a 60-minute process. Doing that on the phone is incredibly difficult because people get bored, they disengage. This doesn't happen for Impulse. So the call center rep shares their screen with the customer on the other end of the internet connection. So they're on the phone having a conversation, watching their screen. The call center rep then takes them through a needs analysis, kids, income, liabilities, and so on, then takes them through product selection based on the needs analysis, then takes them through the application form, and then emails them a contract, an electronic contract, while they're still on the phone. Staggeringly, they're 200 to 300% more productive than the mobile sales reps. So previously, the call center would have said, well, let me take your details and we'll make an appointment for somebody to come and see you. Then work gets busy, kids get sick, appointments get cancelled, they've lost the customer, they've lost the opportunity. They're reaching down the phone, they are grabbing the customer, commanding their attention, taking them into an engaging experience, and completing the transaction while they've got their attention. And they're doing it at a time when it's convenient for the customer and the customer is actually thinking about insurance. Their close rate in the call center for new business sales is 90%. Closer to home here in Australia, we've been working with Telstra for about 4 years, specifically in their business division, where they've got 850,000 small business customers. They went out to their customer base and said, tell us what we could do to provide you with better products or services. And some of the feedback they got was, I can't find what I'm looking for. So we worked with Telstra and responded to deliver an intuitive product selector. That wasn't about navigating multiple pages of content about phones and plans and so on. It asks you questions about what you're looking for, a little bit like AMP Superannuation Simulator, and then recommends the products that are going to fit what it is that you're looking for. Then customers said, well, that's great, but if I'm going to buy a mobile phone, I want to hold it in my hand, I want to feel the weight of it, have a look at the screen, see the size and so on. So they created a really easy to use shop and partner finder. And it went beyond just telling you where the nearest shop was. Based on what it was you were looking for. If you wanted to talk about mobile phones, you could probably go into any shop. But if you wanted to talk about networking 15 offices, there were a few select dealers who are really well equipped to handle that conversation. So I would recommend that you go to the right location to have the best conversation you possibly could. But then there were other range of products, such as those networking products, where the customer said, I'm not going to order that online. Now the feedback that Telstra got was that the paper form they were using for signing somebody up to a networking product, it was easier to get a mortgage out of a bank than it was to get a broadband connection out of Telstra. It was 13 pages long. So they replaced it with an electronic form that the sales reps could use online and offline. They had a 100-fold increase, not 100%, 100-fold increase in the number of orders they were receiving, simply because they fixed the onboarding process. So at the bottom, in complex product ordering, which is a high-value product for Telstra, they had a 100-fold increase. And at the top, In online product selection, they had a 400% increase in the number of people using the online channel to choose a product, instead of going into a shop or phoning a call center. So, if we know that customers are dissatisfied and we know that creating a better customer experience is one way that we can engage with them, is it actually worth doing it? So you've got a couple of reports that you can take away today that are Forrester reports, courtesy of our friends at Adobe. Thank you very much. One of those reports, it gives you a breakdown that for $1 million invested in a customer experience project to create control, choice, and clarity, you should be able to see an additional $600,000 in lead conversions, $11 million in increased orders, and $1.7 million in reduced costs by creating a better online self-service environment where staff don't have to actually assist customers. Now that is across a range of different industries. It's just an average or a benchmark, whether you're in hotels, whether you're in financial services, whether you're in insurance. It's just an average that they've constructed from based on their research. And in that report, there's also a really great table of if you're going to invest in customer experience, what kinds of things should you be investing in. So under the titles of value, navigation, presentation, and trust, they've highlighted 10 items with recommendations and typical results that can be achieved by focusing on those customer experiences. So at a time when customers are really quite disengaged and untrusting, but they're much better informed, we're hoping that we can work with you guys and partner to create those super experiences that will provide your customers with control, choice, and clarity.